Good evening, and welcome to Law Talk, the show that brings the law, the Constitution, and the events of today into your living room. Mark, what are we covering tonight?
I think we're going to start out with Cyprus.
Cyprus. We're talking about the island nation that has been known as a central foothold in the banking industry where a lot of money is parked. Is that the Cyprus we're talking about?
That's the Cyprus we're talking about, and there was a huge bank failure there, and there's really been some precedent-setting events that have taken place.
Well, wait a minute. When talking about precedent-setting, are we still talking about the euro taking the problem in the European Union and Cyprus having a debt that wasn't repaid? Is that where this is going?
Well, yeah, there's pressure from the EU to give them, I guess it was 10 billion, give them 10 billion euros.
That's a bailout.
Yeah, it's a bailout.
It's a bailout. Why is Cyprus failing?
Well, a lot of the banks there put money into Greece.
Oh, was Cyprus one of the countries that backed the resurgence in Greece and the loans to Greece, and so they were expecting to be paid back?
Right. They bet on a rebound there, and it didn't happen.
Well, we know that why Greece did not happen is because they never really took care of their social problem of funding people from cradle to grave. But why is Cyprus falling into the same? Did they over bet that Greece was going to come back?
Yes, they did.
Okay, well, how much money are we talking about here, Mark?
Well, it's hard to put your finger on it. You know, some people say 4.3 billion. There's billions here, billions there, but it's a fair amount. But what's interesting about this whole situation is how they're going to handle the loss.
Well, how are they going to handle the loss?
Well, what they're going to do is they're going to do kind of a sliding scale, and the depositors who aren't insured are going to have to take a haircut.
Wait a minute. When we're talking about taking a haircut, we're talking about something a little more literally than we're talking about a financial haircut. Is that correct?
That's correct.
Okay. And so how are the people that have bank accounts going to take a financial haircut?
Well, it's hard to say. I mean, some numbers have been bounced around and said, well, if you have over 100,000 euros, which I guess is like $130,000 in your bank account, you can get hit for a certain amount. But now it turns out, I guess, even people below that are going to be hit for a certain amount. Maybe that's 10%. When you're down to that level.
Okay, yeah. This has been a hot topic in the news lately because I understand that the consideration by the European Union was that they were putting so much pressure on the government of Cyprus that the government of Cyprus was actually going to lock the banks down and then forcibly take money from bank accounts to make up for this I think it was how much was it, a $10 billion repayment debt for the European Union?
Well, that's what they want for the bailout. I think that they bet about $4.3 billion on the Greek debt.
Okay, they bet on that. Okay, so what's going to happen? What about the deposit accounts?
Okay, so the depositors, you know, if you're over 100,000 euros, if you're rich, you may be hit for 40 to 60% of your deposit.
But wait a minute. That's never really been done before in the modernization of the banking rules. So why is it that Cyprus is reaching to something that's completely outside of what is normal banking procedure?
Well, they have some, I guess you would either call them reasons or you might call them excuses. And they go like this. They say, well, first of all, Cyprus has a lot of money laundering going on because the Russians use that to launder money.
Wait, are you talking about the Russian oligarchs?
Well, that's not really stated one way or another, but it says they're using that. Now, there was a treaty with Russia, and they did work out a treaty with them, so they do a fair amount of business with Russia. But basically, the Russians trust the Cyprus bank because it's basically a British banking system, so it's reliable civil courts and that kind of thing.
Okay. So they can enforce their deposits if something goes wrong.
And so, well, contracts in general.
Yes.
Also, I think there's quite a few Russians living in Cyprus.
Okay.
So, but what happens here is that it's that the money in Cyprus is being put back into Russia.
Well,
so it's not like coming out of Russia and going to Cyprus. It's like being put back into Russia.
Yeah, from Cyprus.
Right, from Cyprus.
Okay, so then
it's going to be laundered the other way.
Yeah, but I got a question. Doesn't Cyprus have a lot of natural gas off the coastline that the Russian gas companies are using and they're taking through transactions and contracts with the Cyprus government?
Well, there is gas. There is gas, but I'm not sure what the value is and who has the holdings.
Well, what I understood was the Russian oil companies were going to do a deal with Cyprus to help refund their debt load to the European Union.
Well, that might have been a ruse.
It might have been a ruse for what?
That might have been a ruse. But anyway, going back to the precedent-setting issue is that if you're going to do a sliding scale, in other words, your poor depositors you're going to hit for 10%, and your richer depositors you're going to hit for 60%. That's never really been done. A progressive
Well, it's like an instant taxation.
Well, it's not tax.
There's definitely no representation.
Yeah, there's some confiscation going on. So, but this has never been done before. So this really has a big effect on banking and private enterprise and the whole idea of how safe your money is in a bank.
Right.
And whether you should put your money in a bank.
I understood they closed all the banks down for over 2 weeks, and they were restricting withdrawals for even the common folk in Cyprus. And I understood.
Well, they had capital controls. You couldn't take out more than $5,000 a month. You could only take out $300 a day from your ATM. If you're leaving the country, you can only take out 3,000 euros. Oh, that's all in euros. That's not in dollars, which is like another 20 or 30% or something like that. So yeah, they did lock everything down. But what's interesting, well, why don't you tell about that? What's interesting, there was some money got out before the lockdown. Well, and when people were asked about who did this, who got the money out, the response was kind of the politicians and the bankers.
Yeah, I think you're referring to the situation where ahead of the vote on whether or not you're going to take money from each of the accounts, about $8.1 billion electronically vanished overnight. And it's interesting because that money was talked about in the Cypriot news that it was going to be, all the money was going to be effectively taxed and to pay off the debt. But what happened was, mysteriously, there was a direct electronic line leaving the country, and a substantial amount of the money in deposits did vanish.
So it got misplaced. Yeah.
And misplaced. And the funny part about that was it just so happens that those were related to some of the richest people in Cyprus and some of the largest bank accounts put in by the Russian oligarchs and the like, effectively. So this money just vanished. So, and no one's really talking about that in the news, which I found interesting. I found in one article that was actually from a newspaper overseas that brought that up, that money vanished. Over here, that should have been out in the news about the fact that how did $8.1 billion disappear overnight when all the other people had the banks closed down? They couldn't get money really from their ATMs. There was riots in the street over this. So where this is all going? I just don't understand.
Well, going a little further on the kind of
could this happen here?
Sure. It's more likely to start with Greece and then Italy, Portugal, and Spain. But what you have here is that they're saying, look, we're giving a special treatment to this situation because there's money laundering. Well, yeah, I don't know. I mean, if you have money going from Cyprus to Russia, is that really money laundering? It's all been taken care of. I mean, they have a treaty; it's taxed. Yes. Okay, so then they say, well, it's because you have a larger more money in your banking business than you have in your GDP. You know, like 7 or 8 times. But if you look at that, then you have the same problem in a lot of other countries: Britain, Germany, France, Austria, Spain, Luxembourg, the Netherlands. They all have more money in their banks than their whole gross national product.
This sounds like a really bad precedent.
So really every excuse or rationalize they have to treat the situation differently doesn't really hold water. You know, really what they're doing here is they're kind of changing the order of how things work. And it's bound to have a cascade effect. Because if they can do it here, then the next place, like I said, is going to be Greece, Italy, Spain.
Yeah, but wait a minute. This is going to completely erode the trust in any banking system. If your money, when you deposit it in the bank, and if you don't think you can get that money back, you're not going to deposit it in the bank. There's going to be a lot of people with little strong chests underneath their beds. A lot of people with their own private safes. But how could this ever spread here? I brought that up a second ago. Could it spread here?
Well, sure.
And what are we going to do about to protect that? Are our banks under a stronger protection that the government can't just come in and say, oh, by the way, we have to pay for the Affordable Care Act, so now everyone's going to have to pay 10%?
Well, here you've got a situation where like I said, there's no real thing that differentiates Cyprus from a lot of other countries that do a lot of banking. So there's no real reason that they couldn't do it anywhere else.
Okay, I think what we ought to do is we have to pay attention to where this is going. But